Hi, welcome again to another edition of Market Analysis for today, March 7th, TGIF. It is Friday. It is going to be a nice weekend. And let's see what's happening in the markets. You know, tariffs may be bad for the stock market, but uncertainty is even worse. President Trump delayed levies on more goods yesterday, pausing tariffs on imports from Mexico and Canada that complied with his 2020 free trade agreement, is the latest reprieve following a one-month exemption for autos. But significantly, the stock market reaction was a surprise. It didn't respond well. The S&P 500 declined 1.8% and has now moved more than 1% in either direction for 6 consecutive days, the longest such streak since November 2020. Unfortunately, the index is down 3.7% over that period, falling on 4 of the 6 days. At this point, companies, consumers, and investors may have tariff fatigue. What they actually want is to know the full extent of Trump's trade policy now. That way they can plan investment, spending, and portfolio changes. Instead, the market is at the mercy of almost daily, sometimes contradictory updates on the White House tariff strategy, with a series of deadlines now congregating at the start of April. The prospect of further clarity seems some way off. The focus will likely shift to the real-world impact if it hasn't already. Now, today's jobs report came in at 151,000 versus the estimate of 170,000. Stock futures turned higher after the latest update. Unemployment came in a touch below expectations, with the S&P 500 up about 0.3%, the Dow up about 0.2%, and the Nasdaq 100 up about 0.4%. The gains were modest, and given the market's tendency to sail into strength, don't be surprised if stocks fall shortly after the open. So with that being said, let's look at yesterday's fluctuation. Market completely on a downtrend. It was just a sell-off. We have rebound of that 20,000 psychological round value that I spoke about, and we did found that support. The market reversed, and it went as almost, it didn't even come up to 20,200. Okay, now today the market did open with a gap up towards that round psychological value of 20,200. Okay, so it continued to did a little bit of a modest pull to the downside. Is retraced, and now we're seeing that movement back up. Now again, don't be surprised if the stock market does abruptly fall shortly after it opens, which it'll be about 40 minutes away from now. Okay, so therefore, yesterday's swing low is going to be our first level of support, and then 19,800 psychological round number. Okay, so be on the lookout for that movement lower. Therefore, are we going to be entering? Are we going to be looking to make that 20% correction or movement and entering a bear market? We'll find out. Then we have yesterday the market did fluctuate below both of our level of support, violating them. Today the market as well, the first one, so therefore we need to update that one. Again, we're going to use yesterday's swing low as our first level, and our second, I'm just going to use a tight spread. Yeah, 20 points spread. I don't think I don't speculate for the market to make a deeper move, but then again, I could be wrong. I'm just going to use that level. So again, looking for a continuation of this sell-off. All right, it wasn't the estimate. So we were off 19,000 jobs. So it was not that big of a deal anyhow. So the market for the Dow has been creating like a triple bottom here, right? So again, triple bottoms, they want to give you the signal that the market might reverse, right? But which it did in a way. Obviously, on today's fluctuation, the market did open with a little gap down, and it did fluctuate to the upside, but it quickly retreated that. And now let's see if it'll, after this number, will that be, would that momentum overflow into the U.S. session open? We'll find out in about half an hour. But the consensus is obviously to the downside. All right, so crude oil. Well, crude oil, after the OPEC Plus coming out and saying that they are going to increment their output, so that is going to be, obviously, they're going to flood the market with crude oil. But see, we need to understand which crude oil they have. There's two types of crude oil: the WTI, which is West Texas Intermediate, and the Brent. So look at it this way: WTI is gasoline, Brent is everything else. So the WTI is the one that the United States has, and Brent is what the rest of the world has. So this particular contract, crude oil, follows WTI. Okay, so perhaps we didn't see that fluctuation to the downside as strongly as you could probably have seen it on Brent. But however, I'm still speculating that since Trump's administration wants a lower crude oil, and with the OPEC Plus members coming out and flooding the market, that could also put some pressure on WTI. So right now, so far, the market seems resilient and rebounding, from this low that made on Wednesday. Yesterday, we did have a little also fluctuation to the downside, closing the red, but today we're seeing much more of a rally to the upside. How much more of a rally to the upside are we going to continue seeing? Or we don't know. Are we going to be seeing $40 by the end of the year? If that's the case, well, the 66 dot, the 66 marker, this historically, if you go back in time towards October, that's where the market created a triple top, and the market rallied from that high all the way to 130 when it made that nice all-time high that has not been revisited. So I'm gonna contract. So you see that here, 66,000 right around here. So this is what I'm looking for. Okay, so March, this is the first time that the market hit that value, 66. Is retreated, and then from here it rallied all the way to 130. Okay, so therefore the market has come down and touched those levels 1, 2, 3, 4, 5 a lot of different times in the past, and it has found support. So this value here, 66, is a very strong psychological support level, and should we break it, then we're seeing next $50, and then the next one that you can see that it was a resistance pretty much done is around the $40 marker. So therefore, that's why I'm saying $40 by the end of the year if this continues, this trajectory or this sell-off continues, this move from this high. Okay, so that's for crude oil. My speculation is to enter trades that are in sell mode, so selling. Nat Gas, I think Nat Gas has run its course as well, and we are in March, so the consumption is going to be lower. Now, obviously, the United States is going to be supplying Europe with a lot of liquefied gas, so that the demand is going to still be there. But let's see, perhaps this could also be just some profit taking after having a nice move to the upside, and it is a weekend. So let's use this swing low as the first level of support, and then $4 just because psychological round value on it. Resistance levels 450, and then let's just use this almost double top here around what looks like a double top. So maybe say that's not a double top, but I mean, you can't be so precise. Okay, then we have for Nat Gas, so selling Nat Gas, gold. All right, so gold is setting itself up for a breakout. Okay, so we are making equal highs and basically equal lows. All right, and then the breakout to the upside is imminent. I mean, there's no reason for gold to sell. Actually, gold is maintaining its value above 2,900. So I'm looking for opportunity to buy. Silver is doing a retracement so far. Now, how much of a retracement are we looking? Well, let's measure that from this swing low to that swing high from yesterday, and then then we want to be able to see coordinate style. We want to be able to see our levels. I want to see 1% nor this one. All right, so there we have them. So 0.38% is where markets usually come to and reverse that move, so it can continue its previous trajectory, which is to the upside. And then the golden ratio is the where we expect markets to come in, which is basically where I have that second level of support. So let's just leave that there. So there you go. Those are your levels of support for silver for today. Then we have copper. Copper also, I'm gonna use that 20-day moving average as my first level of support, and then that swing, actually this area right here is showing me some congruence. Now, as far as resistance goes, let's use the upper Bollinger Band and 480 as a second level of resistance. So far, it is trending lower. Let's see if the 20-day moving average finds support for copper. Bitcoin, well, we saw the news of that strategic reserve of Bitcoin being signed into law. The market didn't really take that well in. So, and we saw that sell-off. Now, this could just be profit taking or different scenarios for Bitcoin. So let's just leave 84 as our first level of support, and then let's just use this swing low with the lower Bollinger Band, giving us some direct. Oh, wait a minute, that is not what I want. That's a resistance line. Sorry about that. This one, there we go. Let's just use this one, okay? And then 20-day moving average is going to be our first level of support, and then 50-day moving average, our second one. I have resistance. I'm sorry. Keep on mistaking. It's Friday. My bad. Okay, euro. So euro finally picked its head above 109. Well, almost 108.88. I'm looking at 109 to be our target for today. So at 109.5, that's going to be our second resistance. First support 107.5 and 107.6, our second level of support. Looking for that move above towards 109 and perhaps closing above that. The pound did pick its head above 129. It retreated. It retraced quickly. So I'm gonna leave 129.5 as my first level and 130 as our second. Same level of support. Looking for that 130 candle, and that will happen as we see Mr. Dollar Index dropping. I'm gonna bring down my resistance to 104.5, and I'm gonna leave the same level 103. So if we do, it opened a gap up. Okay, it has been closed, but let's see if it'll continue to move lower. If it does, we'll see a nice spike on the currencies and the metals. Have a great weekend, and I'll see you on Friday.